Good morning, everybody. My name is Miriam. I'm the CEO and co-founder of ValueCo. I'm thrilled to welcome Vincent, Global Head of Sustainability, today for this intimate fireside chat. We're not many people, so it's great. We're going to have time for questions. Vincent, maybe a quick introduction about yourself.
Yeah, thanks a lot, Miriam. Indeed, my name is Vincent Triesschijn. I'm Global Head ESG and Sustainable Investing at ABN AMRO. That means that me and my team were responsible for the sustainability policy for all our investing activities. But on the other hand, we're also very much involved in strategic discussions around ESG and sustainability, predominantly for the investments that we do on behalf of our clients, wealthy clients, but also retail clients. We also have an insurance company that we invest for. So we have a global mandate, and our policy applies to all these investment activities. Yeah, and obviously ESG data is an important element of the policy, but also let's say our daily work. And so we make sure that ESG data is available to our investment colleagues, to portfolio managers and analysts, to the asset management company. So with that, this is a very relevant subject for us, and obviously sustainability and also climate is a really hot topic for us as a bank. But also, of course, for you, everyone in the call, and especially for you, Miriam, because you're at the New York Climate Week, I understand. So great to have you from New York in the call, Mathieu from Paris, and many others. How is the New York Climate Week, by the way?
Yeah, so it just started actually for me on Sunday. It's been quite hectic, many events, a lot of talks, very interesting talks about blended finance too, about how to address sustainability in emerging markets, and because obviously there's a huge lack of data and the problem is that if we really use only data to invest, then it's getting riskier to get into these countries. So very busy, many events, many people from all over the world, and a lot of good intentions, let's say. I would also a lot of talks about women empowerment, and so that was like really a hot topic during this week. I mean, it's not over, like it's still like going on, but I'll be able to tell more at the end of the week, I would say. What is the market status today, Vincent? Like, can you share your views on where do we stand today, like from a sustainability point of view?
Yeah, sure. Yeah, I'm already involved in sustainable investing for a pretty long time. Also in the era that was still unregulated. So at least here in the European Union, we now face a regulated ESG and sustainable investing environment. And now that SFDR came into play, but also had MiFID II directive has been adjusted, and there's now a sustainability questionnaire for clients to make sure that we also take their sustainability preferences into consideration. So I must say it's a completely different environment with that. So in the early days, indeed, there was a lot of focus on ESG, but I think many people were mixing the definitions ESG and sustainable investing. And I think now that we have SFDR here in the European Union, at least to many, it's clear that ESG is not the same as sustainable investing. So these definitions become more clearly. You could say that there's a bit of a market standard emerging, even though even with the articles in SFDR, that should be clear. Article 6, non-ESG, Article 8, ESG promotion, and Article 9, sustainable or impact. Yeah, you see that the market practice sometimes is a bit different. So many asset managers, for instance, use Article 8 and Article 8 plus. 8 plus for ESG leaders or companies that do that have a best-in-class approach. So yeah, it's very interesting for me to see this pivot from this era where everything was possible and there clearly was a lack of standardization to an era where it's fully regulated and obviously a lot of attention from regulators and other stakeholders. So I have the feeling that the topic is maturing as well as many other the topics around or surrounding sustainable investing, including ESG data. So yeah, what I see is that what we used to have is a lot of focus on aggregated ESG scores and ESG data. And now I see that many investment managers are moving much more towards using raw data. Sometimes they also do more analysis themselves. So it's really interesting for us to follow what is happening in the market. And what kind of investment decisions we actually see amongst the asset managers, asset owners. And that's obviously where you also come into play. On the ESG data side, we're continuously looking into the various options that we have, various data providers, but also obviously we try to keep track on all the developments that we see and innovation around ESG data. Maybe that's good to hand it over to you again, Mariam, because you have been making quite a journey as well there, and you're in the midst of this. I must say we're a very happy user of ValueCo, but no one can introduce it better than you, of course.
Yeah, I mean, I would say to get back on the data and the issues that we see on the data. First, there are still issues, of course, with the raw data because companies today, when they have trouble collecting the data, they don't have this similar resources to do it. So when they do it, there are discrepancies. The data is not audited. It's still declarative. So there are issues with the raw data, but it's moving forward. And as I mentioned earlier, you cannot expect that in emerging country there is a lot of data. I mean, it's really very hard. I had a chat yesterday with someone from Equity Group in Africa, and they don't have access to data. The data is really scarce, so they have to come up with models internally to make estimations of the data themselves. So it's not even covered by agencies. So I think on the raw data, it's yes, investors want to have access to a good quality raw data, but there are still many challenges in there. And then there is another challenge, is that once you have access to the raw data and you build your own model and you have your own view, then you don't know still what our peers think. You don't know what the market thinks as a whole. Like, everyone is doing his own opinion in-house, and it stays in-house. I mean, if you draw the parallel with credit, like corporates today, they publish financial reports, rating agencies, Fitch, Moody's, S&P rate them. But then banks and asset managers, they do have their own internal credit analysis, right? But you see in the bonds market, you see also in the CDS and the credit default swap, what market participants think about the sustainability about the capacity of a company at servicing is that. Like, you can really see in the market what is the probability of default and what is the recovery rate. So if you draw the parallel with ESG, I mean, today corporates are publishing sustainability reports. They are reporting on their environmental, social, and governance practices. You have agencies rating them. The correlation between the ratings of the agencies is like around 54%, as per the studies of Florian Berg from MIT. But then each one of you is actually using the raw data and like different sources of data to really make your own assessment and scoring these companies on their sustainability and on ESG internally. But you are keeping these scores internally, so we don't see what the market overall, we don't see in any parameter like what the market thinks. And that's what ValueCo address. So basically what we do is we come to each of you and we ask you to contribute your scoring in a confidential way. We anonymize the score, we harmonize it, and we rebuild the market perception. I mean, what we do in a sense is like we are building a quote on ESG risk, on sustainability, to understand what the market thinks and to let you know where you are in the market, like compared to peers, but also to bring feedback to corporates so that they understand what investors think about them from an ESG perspective and a sustainability perspective. So, I mean, if you are like a listed corporate today, you're driving your strategy based on your stock price, based on your funding level, but you don't have an aggregate view on your extra financial performance, and you don't see how it's impacting actually your financial performance. And I think for sustainability to move forward, we really need to establish that correlation between, like the dollar value and sustainability in an explicit way. And for that, we need a market parameter, and that's what we are trying as a company and as a fintech to bring forward. Yeah, so many challenges on the ESG data. And how was your journey, Vincent? Like, can you share with us how have you been tackling these challenges with ABN AMRO?
Yeah, so partly we have outsourced our ESG research to, like many others, to an ESG data provider. And we use that raw data in combination with our own criteria and our own policies to come up with, let's say, a sustainability classification framework, where we basically segregate securities and investment products according to the level of ESG or sustainable investments. Obviously for us, it's important that we regularly benchmark this compared to the market, but also compared to other data providers. So we have one ESG risk data provider, but we would also like to validate if the data that we buy from them, if that is in line with the market. So obviously there are two elements. On the one hand, the ESG data that we buy, but on the other hand, also the criteria that we have in our policies, the exclusions that we use there. So basically the ABN AMRO proprietary source, so to say. Yeah, and so we have several options to validate what we do on the ESG data side. So one of the options would be to buy a second ESG data set, but obviously the difficulty there is that you only compare one ESG data provider with the other. And that's, from a statistical point of view, less relevant than comparing, of course, our data set to many others. So we started looking into what we call an ESG consensus data set. So not so much one additional ESG risk data provider, but more an aggregate of all the different ESG data providers out there, so that we could compare ourselves to the average or the median, or to have basically an analysis that is more statistically relevant. That turned out to be very difficult. In that case, you have to buy many ESG data sets. It's expensive, but also from a logistical point of view, it's a nightmare. So we were puzzling a bit there, how we could continue. And that's also when we came across ValueCo, because we also had the discussion. It's not only interesting to take a look at the ESG data providers, but also what the market is doing, what asset managers and asset owners are doing in general. So I think the combination of that we found with ValueCo. So obviously, many asset managers, asset owners supply their own proprietary ESG classification or ESG rating in their platform, and that allows us to compare our data with many others, indirectly with many other ESG data providers, but directly with many other data participants or market participants, so to say. Yeah, so for us it was a really good solution, yeah, I can also share the results from our validation study. But maybe before we go there, Mariam, it would be nice that you show what the platform looks like, and that you give a little demo on your data set and the tooling. And then afterwards, I can, of course, show what we have done with that and what the results are.
Sure. So yeah, let me share my screen with you and explain a little bit how all this works and how. So basically, as an asset manager, like you will have the possibility to upload your ESG data. So everything we need, we don't need much actually. We need only the ISIN code, the ESG score, the E score, the S score, the G score, and now we just started also benchmarking SI. So the SI level like is 0 or 1. So you can upload that like in the bulk, but you can also, we have APIs. This is more like for institutional investors, but we can also do the analysis at a fund level. So what happens then is I will show you like one example for a company. For example, if we take Total Energy, let's take this one. So here you will have, here is the distribution of scoring of different asset managers. So we get scores like some of them are A, B, C, G, some of them are out of 10, some of them are out of 100. We harmonize these scores, we anonymize them. The way we have two methodologies to do it. The first one is just a statistical scaling of the scores. So to make it simple, if it's a score out of 10, like we just multiply it by 100. The second one is really, we will look at at the ranking of the company in the investment universe of the asset manager. And that's basically, we look at the quantile, right? So here, sorry, this is probably, okay. So what you see here is that, for example, there are like 3 investors who score Total, their harmonized score is between 10 and 20. You have like 5 of them between 60 and 70, 2 of them between 40 and 50. So what we call the consensus is actually the median of this distribution. And we have another parameter that we call the strength of the consensus, which is actually to which extent the distribution is converging. So a distribution with a very high, like close to 100 strength of consensus is a very converging distribution, and one with like a strength that is closer to 0 is actually very scattered. So here for Total, you can see the level of consensus is around 60. We also can have the distribution on the E, also on the S, on the G, etc. And every time you have basically the consensus, but also the strength of the consensus. And you can look at this also from more like a ranking in the investment universe. So that's the quantile. And we can see that actually when we do this, it's the levels are slightly lower, which means that a lot of investors in the end, they look at investing, they have more of a best-in-class approach. So here, if I go back to ESG, let's say you want to compare Total to British Petroleum. So what you see here on the right is the level of consensus, and like on the x-axis, and on the y-axis is the strength of the consensus. So what you read here is that most investors, asset managers that are contributing, they tend to agree that Total overall has a better ESG score than British Petroleum. So we have here indeed a consensus of 60 with a strength of 63, while for BP we have a consensus of 43 with a strength of 54. Then you can do this on the E, and on the E you see it's actually the same. However, I think if you look at the S, for example, then you can see that British Petroleum actually has a better S score than Total, and the level of agreement of the investors there is also much higher. So we have a consensus of 58 with a strength of 78, while here we have a consensus of 50 with a strength of 69. Now you can do this exercise. Actually, you can add as many companies as you want to benchmark this company, but you can also put on auto, and then it picks all the companies in Europe in the energy sector that you can compare. This is, I'm showing you this like more that you understand the concept. So we're kind of building a bid offer spread on like quotation on ESG in this case. And this is the corporate view. This basically allows the corporate to understand what you investors think about them, and also to benchmark themselves to their peers, and to establish, like, to understand better investors' expectation and work on their sustainability from that point of view. Now, getting back to you as asset managers, basically the idea here is to be able to benchmark your ESG scoring compared to the peers and like your strategy as a whole. So what you see here is basically that this asset manager, this is a demo account, has, for example, a tendency to overrate compared to the median the communication services, the healthcare in Europe, that in Middle East, they have actually a negative bias on consumer discretionary. It's actually here 25.90%. This means that for every company located in Middle East within the consumer discretionary sector, we looked at the consensus level, and we looked at where is the asset manager in the distribution, and we calculated the delta, and this is the average. And so this allows you first to assess how is your ESG strategy behaving compared to peers. Is that in line with your strategy as a whole? Is that in line with your commercial speech on your strategy? And also, this is would be interesting for MiFID, because then you can really, for a retail client, establish whether this is like a good product that fits their wishes and their profile, their sustainability profile or not. So then, basically, and this is what you are using, Vincent, you can get here, you can have a more granular level. So you have your quantile, and you have the consensus. And for every company in your investment universe, so all the data is downloadable, of course, you get the consensus and where you are compared to the consensus. So for example, like if I will put like a focus here on larger companies too. So here we can see that this asset manager has the consensus is much higher than their quantile. So they have a tendency to really underrate Neste compared to the consensus. While, for example, if we take this company here, Palantir, so they score Palantir much higher than the consensus. So this is basically used first to really, for every company in your investment universe, identify whether you are an outlier or not. Because indeed, if you score a company 90 and the median is around 50, either you are really good because you saw something the rest of the market didn't see, or and then you can use that actually to better sell your strategy, to put forward your differentiating factors, or you are there and you don't know why you are there, and then you need to dig further, and then it's really like a risk management tool for your model. So this is more of a data validation tool that also complies with what ESMA and what the regulator is expecting in terms of data validation and in terms of responsibility of asset managers and bank for their own data. Now, and this is more of like let's say, a signal product. Here, on top of the consensus where you are, you also have access to all the distribution. So you have access to the strength of the distribution. You have access to different metrics, like whether it's a best in universe approach, a best in class approach. You can identify whether you're an outlier or not. But like the use case of and this is also exportable. The use case of this is basically that you can identify, for example, you can build watch lists. You can identify, for example, companies on which that has a consensus that is low. Let's say that has an ESG consensus around 40, and that the distribution is really converging. So most investors agree that there's low ESG performance. And then you can identify also companies on which nobody agrees. And so for us, like these are the companies that indeed can have a high ESG risk. So that's one way to look at this. The second use is that you have access also to historical data. So because what is interesting is not only the spot view on the company, like how it looks like now, but also how it evolves over time. So how is the consensus evolving? How's the median of the distribution evolving? But also how is the spread evolving? So the strength of the consensus evolving. Because if you have, for example, a company for which, let's say the median is at 45 or like 50, but then it's going to 60, and then it's going to 70 the next 6 months, 9 months, etc. And that everybody tend to agree on, then you have identified a company that is on the right trajectory. The other way around, like if you have a median around like 45 and then it's deteriorating and everybody agrees that it's deteriorating, then it means that your ESG risk is increasing. And so the risk of a controversy is also increasing. So these are like ways, like signals to identify ESG improvers, but also to monitor your ESG risks and opportunities, and potentially to build new products like thematic products, indexes, etc. So these are use cases we're exploring also with different asset managers. So this is a little bit how it works. Then basically, when you contribute data, you have access actually for free to this homepage, and in there, what you see is that we give you how you're benchmarking at the Euro Stoxx 600 level. So here, for example, we see that the consensus is at 61 on the Stoxx 600, and this asset manager is at 65. And we see the split on the E, on the S, on the G. So we see that they are actually, this asset manager is slightly over rating on the E, on the S, but slightly under rating on the G. And so this is, and we do the same exercise on the S&P 500. So you have access to these, and you have every time the consensus on like whether it's a sustainable, the level of consensus on whether it's a sustainable investment or not. Here you have access also to research that is curated by Mhadhbi, actually, and access to all the research that we produce internally, but also with different partners. So here it's one article, the ESG equity barometer that was published with Euronext, a book called Valuation and Sustainability by Mhadhbi, and yeah, some researcher from Paris, and then you have also the paper that got the PRI award. Yeah, so this is a little bit an overview of the platform. Please feel free to yeah, ask questions or reach out if you want more information on this. Yeah, back to you, Vincent. Maybe you wanted to share a little bit the outcome of the study
Yeah,
that
thanks a
you
lot,
have been doing.
Miriam. Yeah, I think very impressive what you show also from a market intelligence point of view. It's always interesting to see what others are doing and where the market is going. So that's also what we're looking into at the moment, that part of the platform. But what we have used is indeed the benchmarking feature. where we have compared our ESG data set together with our methodology and with the market consensus. I'll just share my screen to show you how we have used it. So we did use the data, so not so much the platform. Hold on, let me share my screen. Hopefully you can see my screen now. So what you see here on the screen is basically similar to what Mariam just showed on the platform with the benchmarking feature. So what we basically did is for each of the companies in our portfolio, we took the value code data set, so basically the consensus, but also basically the area around it where other asset managers are scoring the company from an ESG perspective. And this we compared to our score. So for this particular company, we scored the company much lower in terms of ESG or higher in terms of ESG risk compared to the consensus and the value code data set. So obviously for us, it's interesting to look into the outliers. Like Mariam just said, it could be that we are very good. So particularly for portfolio companies, it's not always a bad sign if we find out that we have an outlier in terms of ESG data or our opinion. Sometimes it's good to have a different opinion than the market. But if that happens all the time, then there might be something else. It might be the data set, it might be your methodology. And that was what we wanted to find out. If we have outliers, and if yes, why do we actually have them? What causes it? Is it our superior investment beliefs, or is it something else? So in this case, we are a bit stricter on the company, but it could also happen the other way around, where you see the value code data set consensus. We are more positive on a company. And that is the case with company B. But you see that this company is still in the area where other asset managers are scoring this company. So we have said for company A, this is clearly an outlier. We are much stricter than the market. But for company B, even though we are more positive on the company, because it is in this, it's in the consensus area, and we have also used the DB scan algorithm as supplied by ValueCo. We have checked if we are actually in the area where other asset managers are scoring this company. So it's just an example where we show that company A is clearly an outlier. Company B, even though there's a big deviation, is not considered to be an outlier because it's still in this consensus region.
I will actually share again one part of the platform, because this the biases analysis, you can have access to it overall, like also here on the ESG, the E, the S, the G, but also per region, per sector, per caps, per sector. So for example, here you can see, okay, as an asset manager, actually I do have a strong bias on healthcare, and I see that it's actually mostly on the large caps. I am like really have a negative bias on energy, and you can do also this analysis per region. So the same that Vincent showed right now, you can also see it like in graphs, like right away on the platform, and you can see how your strategy is behaving per region, per capitalization, and per sector. Yeah, that was just adding a little bit to your analysis. Thank you, Vincent. I think we lost Vincent. Maybe that's, here he is. He's back. Maybe to close a little bit the session and go to Q&A. I see there are some questions coming up. Maybe just forward looking on the market. Where do you see the market heading, Vincent, in the next years?
Yeah, so like we said, and now that this is becoming more and more important in markets in general, yeah, I think there will be much more focus on data, on intelligence, on analysis. Also, yeah, like you said, more on the raw data than on an aggregate level. So that's also the next step for us to really dive into that. Can we use this more in investment processes, in our analysis? Yeah, and I think your platform is definitely well positioned for it. We obviously have the CSRD coming up. And that will supply, at least for European companies, a lot of additional ESG data. Yeah, depending on your resources, it comes for free. You just have to look in the integrated and annual reports of companies. But I think it would also provide an opportunity. Yeah, so yeah, this is what companies report. But the added value is, of course, always in the opinion of the market. If it would be right, then the market is always right. So it's very important next to this official reporting also to yeah, take into consideration the opinion of the market and see where the market is going. So it's definitely on the list for us. It's the next step. And yeah, the more data there is available, the better we can decide which companies to invest in and to do our analysis. So I'm very excited on all these developments. And yeah, obviously we want to stay on top of yeah, all of these developments and data sets and see how we can incorporate them into decisions. But enough talking from my side. I'm very curious if there are any questions either on what we have done with the data set or the ESG industry in general.
Yeah, there is already one question for you, Vincent. So Eric is asking whether you are using these conclusions internally to challenge your managers and externally to communicate to your clients.
Yeah, so we're now looking into using the data set also to challenge managers. So yeah, obviously we really need to understand everything well before we start questioning managers about it. But I think it makes sense. If we can use it to evaluate our own data set, we can also use it to evaluate the data set of others and the opinion of others. So we're definitely looking into using it to challenge external managers, but we're especially also looking into it to use it more for passive managers. We know that they rely maybe more in a rule-based way on external ESG data. Yeah, and there's also a risk in doing that. So obviously active managers, they add their own qualitative or quantitative analysis to it. But in some cases on the passive side or with ETFs, yeah, they just use the ESG data aggregated or raw as it is. So we also see definitely opportunities for using the data set with passive investment fund managers.
Any other questions from the audience?
Still see one question in the chat, or was that the one?
Yeah, that's the one.
Right. Yeah. Yeah, maybe a question for you, Mariam. Of course, we have the SFDR here in Europe. I'm not sure if in New York on the Climate Week that's also top of mind, but whenever you're at the conference in Europe, everyone starts asking about SFDR. And there might even also be some changes to the regulation next year. What is your opinion on SFDR and how could you potentially see a purpose for your data set there?
So actually, thank you, Vincent, for this question. We have been over the summer, because we are at the moment having some discussions with the European Commission, but also with the local regulator, because the regulators, they want comparability, and it's very difficult to have comparability with the SFDR framework. So the study that we did during the summer is that we looked at different, like for example, 2 funds that are considered leaders according to MSCI. and we looked at what is the consensus level for each of these funds. And for example, we have like one for which the consensus is 80, and the other one is 60. So like, although these two funds are in SFDR 8, you cannot look at them in the same way in terms of like sustainability and ESG. So so that's one case. The other case is that we looked at two funds that are actually have a similar level of consensus, but one everybody agrees on, and the other one nobody agrees on. So same, like in this case, you cannot look at these funds in a similar way. So and the third case, of course, is when you go like in a more granular way. You can look at, you cannot expect to have or you shouldn't have a company on which everybody agrees on a poor ESG performance in an SFDR 8 or 9 fund, right? So or you need to be able to justify it, like to justify that you are really doing engagement and etc. So these are the topics that the regulator was interested in. And so indeed, the consultation just opened, and there is actually a webinar on the 10th of October that we will probably participate in. And I think they are really looking forward to hear what the whole investment community thinks about SFDR. To me, there's also complexity that is coming up, because we have in Europe the SFDR, in the UK they are working on the SDR. So how are we going to map also these two frameworks? So these are like questions that are really on the table. Yeah, Mathieu, maybe you want to share a little bit more on this, on the study on your side.
Yes, can you hear me?
Yes.
Yeah,
yes,
very well. We go
Great.
over to the Louvre, right?
Yes, in Paris, in the Louvre. So yes, what we've been doing is obviously SFDR is a text that's quite problematic for asset managers, because it's not specific and detailed enough for them to really understand what they need to report on. For instance, sustainable investments, they need to describe what they consider a responsible investment is without proper definition. So it's quite hard for them to just figure out where to stand. And so this regulation has several shortcomings that we believe tools like the one we're trying to develop with market sentiment can help overcome. For instance, regarding the definition of sustainable investment, or how to position and describe one's ESG strategy based on the scoring model they use and develop, it can be interesting to compare it merely to the market sentiment. And this is what we've been trying to show in the studies that we've conducted, how just taking this metric as a benchmark can help assess the positioning and help asset managers report regarding SFDR, and also improve the data validation processes that have put in place for the CSDDD, so the corporate sustainability due diligence disclosure, that compels them to improve their data validation and due diligence processes, notably in the case of external data providers. And then we've also shown to how we can create funds actually based on the scores of other data providers, so MSCI, Sustainalytics, and how we can create funds that get really good grades from these data providers, but that are actually not that well perceived by the market, or that suffer from a lack of consensus for investors, which can constitute actually a risk. That is also something that the SFDR requests to avoid without a risk-specific definition. So we've been exploring these shortcomings and trying to improve the visibility and clarity that investors can have regarding these new requirements that the European Commission actually seeks right now to specify a little bit more.
Yeah, thank you, Mathieu. There was one more question in the chat. So so when the asset manager put their scores to ValueGo, do they use the same methodology for scoring, or they came out with their score with their own scoring system? So actually, indeed, the asset managers have their own scoring systems and their own methodologies. What we are interested in is really the final output, so the score that they use to decide whether a company is eligible or not, and that they're going to use also to decide eventually how much they would invest or not on that company. So, I mean, you should look at this a little bit like when you look at a stock price, you have the bid offer, you have the order book, and you see the bids of different traders. So if you are a trader, you also have your own methodology, you have your own model, you are using different sources of data, and you get to a target price, and you say, okay, this is my bid, this is what, and your bid in the market reflects what you think of a company. So in a sense, we are interested only in the final output. The only, and that's the score that we get at the end. However, we need to know whether your score is like more simple materiality score, a double materiality, whether it's a best in universe or a best in class. These are the things that we ask. I will also take the opportunity before closing up to show you one slide that is to get back to the, oh, sorry. Yeah, so this slide here, sorry. So what you see on the left-hand side, this is the distribution of scoring for MSCI. So you can see that MSCI considers 2/3 of the companies as leader, yeah, less than 1/3 average, and very little laggard. This is we try to really replicate the distribution with the investor score. So what we see is that investors, they have a tendency, on the contrary, to consider little, like only 12% of the companies as leaders, 22.7% as laggers, and the rest more as average. So this is why, yeah, this is how the market's perception is. So I think this is an interesting one that explains also the result we got in the SFDR analysis. Any further questions?
Yeah, very interesting insights. I see Shireen has a question. What's next for ValueGo?
Yeah, so what's next? At the moment, well, we are indeed like having discussions with the regulators, because they want comparability, and so we are looking into ValueGo's application for MiFID. We have been already working with the institutional investors, pension funds, who also want comparability for their external managers, because indeed, like if you are buying funds, today there is an ESG ranking on Morningstar, but it's using the data of Sustainalytics, so it's not capturing the proprietary approach. And we allow actually, pension funds, asset owners, to compare the different strategies while taking into account the proprietary approach, but also to identify the outliers and to challenge them. So in a sense, the fact that we're bringing comparability and kind of transparency, but without putting at risk the IP of the asset manager, is helpful for both like corporate asset managers, institutionals, but now also the regulators. So I would say next is the MiFID, but also what we are exploring now, we are looking into building indexes with like some of the asset managers we're talking to. They are interested in building indexes, and we are just starting to explore also with trading and derivatives their interest in integrating the signal into their pricing feed.
Yeah, we're just getting started on all of this. That's the exciting part. So great to hear that there's so many developments. And yeah, maybe also for us, we've just done one analysis, but I think both the process and the results are so promising that we are looking into using this further, and obviously also curious to hear what comes next, Miriam. So So great to hear all these developments.
Thank you. Any other question from the audience? Okay. So thank you everyone for joining. Please don't hesitate if you have any other questions. Happy also like to share the study that we've done on SFDR, but also there is another one that we that we are about to release, where we calculated actually the correlation between the consensus score and MSCI score, and we also looked at the correlation between the scores of the investors themselves. So happy to share that. Feel free to reach out. Thank you, everyone.